Eric Muadit, Muadit.com. You asked me to do a review of some of the stocks that you've been trading over the last couple of weeks. So let's do that. We begin by taking a look at HZNP, which, as you can see here, you placed your trade based on the weekly chart after you had 2 weeks of rest. And so let's show that. So you had 2 weeks of rest here, and after that the stock did break out. So there was a breakout after that 2 weeks of rest there. So there was an entry point there, and you recognized that, so that was good, and you went long during this period here. I don't see anything wrong with this trade because the stock had settled for 2 weeks, and as you noted on the monthly, we did not have the 1 month of rest requirement, so you had to have used the weekly chart to find an area to go along. So I don't have a problem with this entry. You went long at the right time, or at least within the 5% window after the stock broke out here. And again, this is after 2 weeks of rest, so good entry there. I have no problems with that. Stock minimum requirements were met. The other one is AGEN, and as you can see here, you are looking to go along based on the weekly, because the monthly does not have at least a 1 month of rest showing. So we can go to the weekly, and you are looking to own this based on this previous or recent weekly closing high. If the stock can move above that, which is where you were looking to go along, then that's okay. So this one is still playing out. If it can stay above that price range of about 950 on the weekly, that's a good breakout. If not, then you need to have at least an idea of where your stop should be now that you already own the stock. And this one was a nice entry based on the fact that the weekly is trying to break out, and the weekly has already seen more than 2 weeks of rest, definitely here with about 5 weeks of rest, 4 weeks of rest. So any breakout here is legit. So that's a good purchase. Now that you own it, you just have to figure out where to set a stop, at least 5 to 8% maximum, or if you think it's not working out, you can always get out of that trade. Here's another one, NTRI, which you are playing this breakout. And again, let's show the monthly. The monthly is already showing 3 weeks or 3 months of back-to-back breakouts after this 1 month of rest. So that was a breakout there, but you're using the weekly, and based on the weekly, we can see that this was your most recent entry level was here with at least 2 down weeks. So that was the breakout there, and you recognize that, so that's good. And your entry is based on that breakout. It came towards the end of June, so somewhere around here, which is still within a 5% window. So within 5% window of 23.44, which was this entry here. So this one, again, I have no problems with the timing there. Now that the stock is moving higher, maybe you can move your stop higher again. There's also an indication here. It's hard to see, but there's also 2 weeks of rest here and a breakout recently right there. So there's another breakout. So while you own the stock, it's gone on to record another fresh breakout. So you can own it, of course, with a stop. Again, that's good timing on your part. I have no problems with that timing there. In fact, I would say in reviewing your stocks purchases, most of them have great, if not all of them, have great technical considerations in terms of the timing. You went long DENN based on the monthly, I believe, and I believe that's right. And actually, scratch that. Your purchase is based on this attempt to break out recently above the recent weekly closing high there of about $12. Nothing wrong with that at all. The stock looked like it was breaking out when you made your purchase. Now it looks like it's struggling. This one is one that I would consider placing a tight stop, because you can see that here it failed to break out to new highs, did not hold above $12, which was around $12, which was the previous weekly closing high. So here the breakout is, let's call it stalling. And once they show evidence of stalling, you can consider at least either getting out or placing a tight stop, because the evidence visually is that the breakout failed. But in terms of timing, again, that's a good purchase on your part because the stock had enough time, enough weekly rest. Even the monthly chart looked like it had good rest. CEMP is another one that we were looking at, and here you placed your purchase based on the previous monthly closing high, and I have no problem with the timing there. Next thing now is just to make sure, since the stock is higher, either take a slight profit or move your stop higher. But this one is doing exactly what it needs to do, breaking out. So on the timing there, that one's good. Let's take a look at another one here that you own. And again, here is just a review based on the timing. Here we can see 1 month of rest. So around $30 is, let me see whether, yes, you are looking at that from a monthly view. So the monthly view gave you 1 month of rest, and so entry here is legitimate. So the timing here is good because you are buying the stock after 1 month of rest, which is good. So there, again, I see good timing. Now the one that, I guess not yet, but here's another one here that you're looking at, and you're trying to use this recent one down month for the next purchase breakout. So if it can hold above $26 roughly, which is where the monthly closed, any breakout above that would suggest that it is breaking out. That's where your purchase took place. Now that it's failing to hold above that previous monthly closing high, you can consider a tight stop because it looks like it could be failing. But in terms of the technical reasoning and the timing again there is perfect. Now on the ones that you still own that I think was a little bit confusing is GI. Personally, I don't see any reason to buy it on the monthly because we don't have data there. We can go to the weekly to find an entry point, and on the weekly again not fully developed, so we have no technical reason to buy there. We go to the daily, and you can say the daily, you can say that maybe the daily MACDs are breaking out here and the RSI has a chance of breaking out. We haven't seen the breakout. I noted that on your journal you did point that the RSI and the MACD is a little confusing. In fact, you used the word yucky, so which I actually would also concur. So not the greatest looking price action all over the place. RSI is not, I'm not sure it's good enough to be breaking out. So this one I'm not sure was a good purchase. And again, you can use smaller time frames for an IPO if the other time frames are not fully developed. But this one I'm not sure what you are looking at, because it would be okay if you bought this when the MACDs and the RSIs were both breaking out. So we haven't seen the RSI breakout here, or that we haven't seen the MACDs at new highs. That's great, but the RSI hasn't followed through. And actually, because it's an IPO recently, you can take a look at the hourly, and on the hourly you can use the same breakout criteria that we look for on the monthly, which is MACDs and RSIs need to be at all-time highs. And you can see here we haven't seen a move to all-time highs, and we haven't seen the MACDs move to all-time highs here recently. So in my opinion, from a timing perspective, I'm not sure what you are looking at. So this one I would say from a timing perspective was not ideal. And I did send you a link on how to trade IPOs, so maybe you can take a look at the previous link I sent you over the weekend to see how you can time entry into IPOs. So of the two stocks that didn't do well for you, the first one is ASHR, which is the China ETF, and obviously you were using the weekly here with this two. After this close here on a weekly basis, you saw 2 weeks of rest when China was doing well. So you got 2 weeks of rest here, I believe 2 weeks, and then on the fourth week it breaks out. So it met the minimum requirements, so no problem there with the timing. Timing is great. Again, you get an A for the timing there. What happened here is, of course, it moved well for you for a couple of, I believe your purchase was at 53, so your purchase was slightly extended. As best as you can, you want to get it as close to the buy point. Nothing more than 5%, generally speaking. So the entry was here, or at least based on this close here, and your entry was based on this breakout. I think $53, let me check, 53.80, 53.18 was your entry. Nothing wrong with that. So somewhere around here. So the question is, what would you have done differently? And as you know, and I saw your notes, taking a loss at about 5% with a maximum loss of about 8% was probably the best way to go. That's the only thing I can say. Otherwise, the timing was great. You're not gonna own stocks that always move in your direction. The market is volatile. Some stocks will not work out. And again, the reason why you bought that based on the weekly is because the monthly was not giving you any entry. So really, when I look at this trade, it was a good trade, just did not work out. And since it didn't work out, then your loss should have been at least mitigated at 5%. Otherwise, not all stocks are going to move in your direction, and that's okay. And that's part of being in the market, and we all understand that. So no big deal there. The other stock that didn't do well is RDWR, and I believe this was based on a monthly purchase. Maybe this purchase here after 1 month of rest. So when you bought the stock, it was trading here, which was breaking out after 1 month of rest. Since then, it's failed, and it happens. And the one thing I can also note here is I just don't like this volatility in the stock. You can see it tends to give back gains. So that is one that probably should have been avoided. Was it a bad pick? Not necessarily. But then again, we come back to the same issue of placing stops. Again, 5% to 8% should have protected you from the downside, or at least taking a big hit. So generally speaking, of all the list of stocks we mentioned, all of them look great in terms of the technical timing and what I call the secondary levels. I think you've mastered that, and so just keep doing what you're doing, and the money and the profit should come. Thing is, when you're seeing stocks not move in your direction, just place a stop. The one thing also I would like to point out is I do like the fact that you're not buying all your trades in a block trade. You are buying it in portions, which again helps mitigate bad timing. So you are doing the timing on the chart correctly. Then you're also doing it good because you're not buying it in one block trade. You're buying it in portions. And the one thing that you can work on is a little bit on the stop. All right, Eric Muadid, Muadid.com. Good luck, peace, and blessings. I am out for now. Woo, yeah.